I think the first question, Bruce, I'd like to ask you, you've seen the, the market change quite dramatically in the last couple of years. What has been sort of the most surprising change in the office market at large?
Yeah, this is truly one of the most fluid, dynamic office markets we've seen in decades. I was just talking to Artie before we began and saying that talk to any expert about where the market is headed right now and you'll get 10 different opinions. Because we're challenged. We still have very strong job growth, 80,000 jobs in the last couple of years. And yet with densification and other factors, the new workplace strategy, a gravitation to new areas in New York, particularly Midtown West, Midtown South, and downtown, we haven't seen the same kind of absorption. We went from, call it, almost 290 square foot per person to now today where the average per square foot per person is about 150 square feet. Hence, we haven't seen the same significant absorption or rent spikes, save for two things, and this is where I think the market is heading. People want a live, work, play environment in terms of where they want to house themselves, and employers today have to hire with the ability to attract young millennials to their workforce. So to do that, they've got to be in the right locations. Hence, we've seen, I think, a gravitational pull towards Midtown West, a city within a city, Midtown South, because of the interesting space that can be created. And I looked up something interesting before I came. And if I asked you what's the makeup of the tenancy Midtown South, how much of that is comprised of TAMI and the financial services industry, if I told you it's well north of 70%, would you think that? Probably not, but that's the case. Midtown West, it's about 65% of the tenant occupancy. So these are changes that I think are more permanent than less permanent. And the last thing I'll leave you with in terms of the dynamic of the marketplace today is that in the good old days, if Midtown was strong, meaning traditional Midtown from 42nd to 60th, then it drove growth in Midtown South and downtown. Those markets now operate very independently. High growth and rent spikes in Midtown South, triple-digit rents in Midtown South, and downtown now operates independently because of the huge infrastructure investment, which I hope we come back to talk about how important infrastructure investment is to Manhattan in the long term.
Absolutely. And just switching to Brooklyn for a minute, Ofer, the same question for you. In terms of the commercial market in Brooklyn, we're looking at quite, blue chip tenants are moving there and actually making that a destination. What is that all about?
Well, if we sat here 2 years ago, there was really no creative tech or TAMI office market in Brooklyn. And even today, it's still transforming to be a real market. I wish we were going to sit here in 10 years and we're going to have enough data. As much as we have in Midtown South. But really, when you look at Brooklyn, one of the reasons that the office market is emerging, and especially the creative tech office is emerging because of the transformation of the demographic of the people that live in Brooklyn. And like Bruce was saying, there's very high concentration of millennials and entrepreneurial types that would like to bike to work, would like to work, and would like to have creative, inspiring spaces for what they believe is a meaningful work that they're doing. So it's less about efficiency, and it's less about cool factor, and as much as it's about having the kind of space that's inspiring you to do the kind of work that you want to do. And so initially it was startups and it was homegrown companies, and over the last, I would say, year, there's several projects, including the project that Artie's company is involved with in the Navy Yard, which are sort of positioning themselves to attract more blue chip tech tenants. But we haven't seen that first lease in Brooklyn yet, other than the WeWork large leases that are anchoring this company.
You've got the Etsy lease would be one.
Yeah, but that's still a homegrown company. So Etsy started in Dumbo, moved to downtown Brooklyn, came back to Dumbo, staying in Dumbo. And we see it as still sort of part of the evolution of startups that started in Brooklyn, 5-10 years ago and kind of grew with the market. But we haven't seen yet a lease, and Bruce, correct me if I'm wrong, we haven't still seen the Facebooks and Googles of the world signing a lease. And finally, there's enough proposition for them. I mean, there's enough projects that actually attract them, like the Class A office space that Artie is developing Boston Properties and Rudin. That's the kind of space that would potentially attract them.
Artie, let's talk about that project. So you've got Dock 72, right? It's an opportunity to build something for what you call the creative class, the tech tenants, from scratch. What does that mean in terms of, you normally work with a lot of buildings that have bones, have a lot of, have been built and have been occupied for decades, and you have to sort of work around that or work with that. In this case, you have a blank slate. So what sort of opportunities does that give you?
Sure. First, thanks for having me.
Absolutely.
Thanks for having WeWork. Maybe it's helpful just to get a sense of how many people in here have actually been to a WeWork? Okay. So decent amount of people haven't. So maybe it's helpful just to give a little bit of what WeWork even is, and give a little bit about my background. But I'm new to the real estate industry. I grew up in sort of the media business and the cable business and the tech business. And the way I describe WeWork to sort of my old peers in the media business is WeWork is programming for real estate. And what do I mean by that? Which is, in the cable business I came out of, we built physical infrastructure, and then we had products and programming that rode on that infrastructure, everything from HBO to Netflix to Snapchat to Facebook. We sort of really created an experience layer on top of the technology that we invested in. And WeWork is really sort of the same. We're not a real estate company. We're using real estate to create a programming experience that hasn't been in the workforce to date. And it's a reason that millennials are attracted to more of an experience layer around work and ultimately living, which we've recently gone into. And to your point, we got into this business by basically retrofitting older buildings. And for those who've sort of been in the before and after, we've really had the ability to sort of have a transformational effect on the building, and it's no surprise when you see them why they fill up so quickly. And why not surprising, we're seeing, interestingly, in the enterprise front, more and more large enterprises actually coming and saying, you know what, this makes sense not just for the startup, but GE, Microsoft, Facebook, we want to put our employees into a...
So you're going to lift the ban on dress shoes that you had in a couple of spaces I heard about?
I'm sorry?
The ban on dress shoes that you had, it's no longer there?
I didn't hear you.
The ban on dress shoes, the dress shoes that you had.
Yeah. Oh, good.
That's a joke falling flat right there, but it's okay.
So to have the ability at, like at Dock 72 to not have to retrofit an existing building, but to really have the ability to work with our development partners and say, this is what we really think through ground up, how we can really optimize the experience. That's something we've been very interested in doing. And, we think we can take the design and what we're doing and the amenities and the services just to a new level.
Can I just, I don't want to sell for Artie, but I do want to make a point about what differentiates WeWork from anything else that's been here before. Two things. First and foremost, one thing we saw at 5 Manhattan West was a trend by major corporates to put their millennial but digital media people, TAMI sector people, into a different building for a lot of reasons, including creativity. End of day, WeWork presents that opportunity for major corporates to take their people out of the state environment, put them into a more creative environment, and that begets other possibilities for them. Secondly, the change today in the way we account for leases, which is going to occur effective immediately, and that they must now be on your books day one in totality, provides an opportunity for WeWork to present an alternative that's off balance sheet, and I expect that will increase enterprise contribution and, in effect, wanting to be in a WeWork environment. So those are two different factors I think are really going to drive their business in the future.
Right. And Robert, one of the things that WeWork and companies like it have brought has been a different tenant mix, right? You've had tenants who are younger, they have different preferences in terms of lifestyle and shopping. How has that affected the retail landscape in core markets, such as Manhattan, for example?
Well, I think, as everybody knows, the retail landscape itself is changing. Between the internet and bricks and mortar, retailers have to become a lot more efficient in the way they cater to customers. They almost have to reinvent themselves and understand who the millennial customer is. It's not like maybe when some of us were kids, we'd go hang out at the shopping mall and meet people and fraternize, socialize, et cetera. That's happening in the workplace now, and it's happening in neighborhoods that are being developed, and where WeWork has taken some, steps, like in Dumbo Heights, where there's a campus where they share it with Etsy, and there's a lot more office space. The retailers that are going in there are tenants from Manhattan that want to go to Brooklyn, and you have Row House, you have Shadowbox, you have Yoga Vita, you have health-conscious, quick-serve restaurants like Dig In and Untamed Sandwiches. So there's something happening where people want to stick around past 5 o'clock, past 6 o'clock. They want to hang out where they work. It's the live, work, play. I know that gets a little bit overused, but it's really true, and it's happening. And it's what a lot of developers are starting to project into the future. What are they building? What is Manhattan West going to be all about? How much of their, occupants are going to be millennials, and therefore, how is the retail going to cater to those people? How are developments like the Hudson Yards going to attract millennials, the Seaport District, Westfield, Brookfield Place, and then any other parts of Brooklyn through all over the city? I mean, you're seeing it in other cities too. Downtown LA is an excellent example of where retailers have to cater to the types of tenants that are living there and working there. And today you see a company like Macy's with horrible earnings. Where are they primarily? In department stores or in the shopping centers. So our focus and what we see happening is a huge urbanization of downtowns. That's where people want to live, people want to work, and that's where people want to shop. And those retailers are going to have to really reinvent themselves, become more efficient, and cater to the people that are in these neighborhoods.
You mentioned live, work, play. Artie, your company is venturing into that field. There was an interesting article in the New Yorker about co-living, I believe, last week. Just talk about what's your elevator pitch for that concept? Because to a lot of people, it seems like extended college life. Is that accurate, or is there more to it?
Sure. Before I get into it, I just piggyback on the last comments is, I think it goes back to this concept of just sort of overall programming experience around real estate. It used to be you went to work and you left. And, I think one of the things, we're doing at WeWork, even ourselves now, is adding more sort of amenities and more services. And as we think about, and sometimes when we take the retail, how do we think about an overall sort of programming experience so that people can have this sort of live, work, and play all in the same place? Is in terms of living, when Adam and Miguel founded WeWork, really from day one, they always felt that the natural extension of WeWork was eventually to go into a living component. And Adam and Miguel both have communal living in their personal backgrounds.
Could you talk a little bit about that? Because that is a really interesting background that they both come from.
Sure. Adam grew up on a kibbutz, and Miguel grew up in a commune-like setting out in Oregon. And, it's a pretty fascinating story that these two guys then meet each other years later in Dumbo. But they really, given their backgrounds, the North Star that they always think about the business and sort of the culture of WeWork is, how do we think about the community? And what are we doing? Is it nurturing the community? Is it making the community stronger? And so we know we have all these millennials who've now come in to work in a WeWork and begin to build their careers, begin in some instances build their own businesses. Well, they obviously need a place to live. And if you're getting out of college now and you sort of compare it to a prior generation, average salaries are probably lower, student loans are higher, and as a result, we've looked to sort of create a living environment with a community overlay that people can live in an affordable way and have a real community experience. And so, as I said, it was always the vision from day one, and we're excited with 110 Wall and Crystal City that we're able to start to execute on it.
I want to shift gears for a minute. So I promised the panelists and everyone in the crowd that I wouldn't talk about the presidential election because I think that's been done enough already. But I do want to talk about the political landscape in the city and the state and what are the key issues from the political lens facing commercial development, retail, leasing, and development in Brooklyn, in Manhattan, in New York. Ofer, start with you.
Yeah, so not getting into the presidential election, there was an interesting article at Bloomberg yesterday that talked about the concept that it doesn't matter who the president would be, the next president would face a recession just because we're already in the fourth longest expansion in the history of the United States. And so I think, that's the backdrop for a lot of what we're seeing in the commercial real estate today in terms of sort of anticipation and saying, oh, wow, this has been such a great run. It cannot last forever. So I think it's in the backdrop of a lot of people that are about to make big commitments. And although the fundamentals, the numbers, and the underlying economics, for the most part, maybe isolating some aspects of retail, have been very, very strong, I think that psychology sort of still exists. But a little bit more locally, we've been we're finishing a 4-year run in terms of residential development in the city. Just in Brooklyn, there's about 36,000 residential apartments being developed. And that market peaked on June 15 last year when the 421A tax abatement had expired. And although everybody thought that maybe we would be able to reach a deal between Albany and the city, the negotiation got stalled, and we are now in a position that there's no 421A tax abatement. So from a perspective of economic development, although you're seeing a lot of cranes and a lot of apartments and a lot of development, a lot of things are happening, in terms of initiation of a new project, we're a complete halt. So just to give you an idea, last year we had in Brooklyn $10 billion worth of investment sales transactions. $2 billion out of it was residential land sales. And I think that our projection is that's going to be about 65% drop in 2016, primarily as a result of the lack of 421A, because you can't really build anything in Brooklyn that is a rental product without the abatement. So that's sort of like the biggest component. Now, without new development in like 2, 3, 4 years down the road, there's less of a need for retail, which there is today. There's less of a need for economic transformation like office. And so that's sort of like the biggest deal.
Robert, anything on the retail front in terms of city and state policy that is playing a role?
Well, I think 421A is a big deal because obviously neighborhoods are built with incentives, and land prices are affected and development's affected by it. And if you want to see growth in parts of Queens, the Bronx, Brooklyn, et cetera, 421A was an important component to that. What you have with new development is new neighborhoods being built, and usually followed by restaurants and nightlife and entertainment, and then retail follows. So I think that although you do have luckily we do have some big projects that are going up, lots of them in Brooklyn, obviously the Navy Yard. You've got Essex Street Crossing on the Lower East Side. And the mayor does seem, quite pro-development with an affordable housing plan in place. So I hope the 421A isn't too big an impediment to a lack of development, but I guess by the nature of it, we're not going to feel it now. Like you said, it's really going to have its effect in the next 3-4 years. So yeah, I mean, for New York to keep growing, you really need development, and where all these people are going to live, and they want to work near where they live. So I think the government does have a big impact.
Artie, one of the things that WeWork is doing is really pushing the limits of density in buildings. I believe there was a project that you applied for density, a special permit to increase the density to 275 people per floor, which would bring the average square feet per worker down to 70 feet, which I've been told if a financial or tenant was in that kind of space, there would be a mutiny for that kind of space. Tell me a little bit about how receptive the de Blasio administration is to some of the changes that you're bringing, or if it's not a city level thing, any political receptivity to what you're doing.
Sure. It's interesting as we've gotten into these enterprise conversations with companies, and I talk to a lot of peers who sort of CFO types, and if you get into with them and you sort of say, look, how much are you spending on a per employee basis to house your employees, and how much USF do you have sort of across the fleet? Reality is, for as big of an expense line item it is on the P&L, it's not actually something that companies sort of often focus on. And I think as you think about density, and you've begun to see companies start to think about density over the last several years as a way to potentially mitigate cost, I think it comes down to, frankly, how you do it. And I think there's a lot of examples out there of people who've gone to more dense environments, and they've just done it, in the wrong way. And there's not enough of, and I keep using this term programming, but there's really, a mixture of art and data and how spaces are programmed as it relates to how many community gathering places should there be, what is the flow, frankly, of the staircases, how does the flow encourage interaction in the place. And I think that's something that, again, is really something that Adam and Miguel are both sort of incredible at on the vision side. Mm-hmm. And look, I think as we have been able to, work with the city on projects, they get that, we have a desire to both be disruptive in terms of bringing a new experience mm-hmm. to real estate, but also, willing and able to sort of work within the current framework. So it's been a very good relationship.
Robert, in terms of design, retail, the kind of stores you see, not just walking down Fifth Avenue, but also on Court Street in Brooklyn and many other incredible stores, new kinds of tenants. What is the most exciting thing happening in terms of retail design or retail spaces, the way they're laid out physically today?
Well, I think that there are several segments of the retail market that are hot right now and expanding. If you look at the grocery stores, companies like Whole Foods and Trader Joe's, I think, have been innovative. I remember first taking out the chairman of Whole Foods probably 15 years ago to New York, and he said he would only look at space if he could operate on one level. I said, well, things are going to get pretty expensive. If you're talking about one level, 40, 50,000 feet in New York City, it's not going to be cheap. So ultimately, they developed a program where they could go multi-level, and I think that was one of the greatest interventions in terms of retail and food markets, that most of the Whole Foods, Trader Joe's, new players in the market have figured out how to go ground and up or ground and down. So size-wise, I think that the markets are not necessarily getting smaller, although, Whole Foods did come up with a new concept today, that was in the paper today called 365, which is a smaller concept, and they're looking to cater to the more traditional grocery store, because you do see companies like A&P filing Chapter 11, Pathmark's closing, the Agostinos are now closing, Fairway filed Chapter 11. So you definitely need to replace many of these traditional markets, and 365 is a new concept that Whole Foods is going to do to address that. At the same time, I do see that as a big growth factor in retail. I also think tenants, like I said before, need to become more efficient in terms of size. So you do see companies like Target doing a city Target, which could be 50,000 feet as opposed to a traditional 200,000 feet. And they're opening in downtown Manhattan and scouring the city for more spaces. Companies like Nordstrom are expanding Rack, which is about a 40,000 foot concept. Bloomingdale's has their own concept. Saks off Fifth, Neiman Marcus signed a lease in Brooklyn and last call, and they're going to be opening. So in terms of Fifth Avenue, I think Fifth Avenue is still going to be the greatest shopping street in the world. Tenants have to be there. They'll go multi-level. They get huge ceiling heights and presence, and they have to showcase their brand. Recently, you've seen companies like Adidas and Coach. But
how many more of those 5,000 a foot deals, the Bulgari deal at 730, how many of those do you expect to happen? Is there a ceiling to prices?
Oh yeah, I mean, we're in a market right now that needs a major adjustment in retail. So I think there is a ceiling to prices. There's a ceiling to escalations. Occupancy cost is keeping a lot of tenants out of the market. It's probably why you see a lot of vacancy on streets like Madison Avenue and Soho. And it doesn't mean that's not going to happen in places like Williamsburg. Maybe Court Street hasn't matured yet. There's north, two sides of Court Street, north and south. Places like Court Street are not attracting tourists, where Williamsburg is attracting tourists. But when you say a 5,000 foot store, yeah, I think a Banana Republic could be 5,000 feet today, where they used to be 15,000 feet, 10 years ago.
Bruce, on the same subject, but on the leasing side, dexterity in terms of looking at space, planning for space. What's your advice to commercial brokers who might be here? And I'm hoping there are some commercial brokers in the audience. Thank you. So what's your advice?
That's it? That's all?
I think there's more, but there's
All right.
commercial brokers / developers, a lot of those. But what's your advice to people who have to deal with these venture-backed companies who often grow dramatically? They don't grow in a steady sort of, step by step. They raise a round, they raise probably their Series B, they raise the $10 million, $15 million, and then suddenly they need to triple their space, triple their employees. So how does a landlord and how does a broker work with a landlord and try to explain that concept to them?
Yeah, it's a good question, Hiten. I think the first thing you want to do when you're representing a corporation that is going to or is in the middle of exceedingly high growth is put the difficult questions in front of both your tenant and get them in front of the landlord right away so that you're not catching up. So some of the difficult questions that you'll see for high growth companies for themselves is what kind of flexibility can we build into the lease? What rights out? Do we have what right to expand do we have on a right of first refusal? Can we get it on a repeat basis? These are things that become critical parts of their ability to make a long-term commitment. And also whether you should make a long-term commitment or whether you should be looking for a shorter term sublease. There's a range of things you want to put in front of corporates that are, or if you will, startups that are going to become more significant entities. From the other side of the ledger, you want to put in front of the landlord the difficult issues right away, such as credit. What will he require given the risks that he's taking? And by the way, that means at the end of the day, being realistic about which landlords will accept a tenant that has some risk to it, but also has upside potential. These are things I think you want to do out front, early, and proactively. Because if you do them later and reactively, you're probably not going to make a deal.
Artie, I think to that point, you're dealing with a lot of those tenants who are coming in, are the next Facebook, the next Snapchat, the next diapers.com. How do you sort of understand their needs for growth, and how do you cater to them when they, I know you have a membership structure, but you have several types of packages that you can offer them. So how do you deal with them?
I think there's a couple of things that we do. One is we have a community team in every building. Mm-hmm. So that community team is in constant contact with the company as they work through, their real estate needs over time. Often, one of the most successful initiatives we've done with some of our members is what we call our Grow With Us campaign. That to the extent a company may think that they're going to have a need in 3 months, they have the ability to sort of grow into the space, and we help them sort of finance that for a few months until they have the need. Because often what you'll have is someone's in a 6-person office, they know they're going to need an 8. The 8's available now, and as I said, we're always sort of like, how do we help our members grow? That's one of the ways we work with them. Flexibility is sort of at the heart of the WeWork value proposition, and obviously, people can come in. They can be month to month. They can, if they want to commit for longer periods of time, they can do that, and we can work with them on rate. But obviously, I think in this marketplace that we're in, and some of the companies we deal with on size, flexibility is really important.
Ofer, this next question for you, and I'd like Robert to get in as well. The Real Deal had an article a couple months ago called Hell Without the L, and it was about the L train and the impact that the shutdown or partial shutdown will have on all aspects of Brooklyn and even Manhattan, just given the sort of the traffic that you get at those stores and at those. Ofer, what's your thought on this L train business? Now there's some sort of timeline. There's a little more clarity than there was a month ago, but
a little bit more clarity, but still not enough. Look, I think it's very concerning to a lot of people, mostly on my side and on the development side. I do think that if you read research about millennials, they're not making decisions about where they're going to live in the next 4 years. They're going to make a decision where they're going to live at the next 12 months at the best. And so, when it comes to places like Williamsburg and Bushwick, when it comes time for them to renew a lease, or it comes time for tenants to sign, to look for an apartment, and suddenly there's no L train, at that point they may make a decision to look at another neighborhood. I do think that we may see a little bit more of an impact in a place like Bushwick on the commercial side versus, Williamsburg residential, because I think Williamsburg matured into such a, there's such a critical mass of people and retail and excitement that I don't really think that a lack of transportation is going to be like a deal breaker if you're buying an apartment. It may be a deal breaker if you're looking for a 12-month lease.
Are you saying it's more self-sustaining, that community, than in Bushwick?
I think it is. I mean, you really think about the prices that people pay to rent or to buy an apartment in Williamsburg right now, and I think that I think they can afford an Uber for a year. That's number one. Number two, what if you take the subway out of West Village? Is the West Village dead? It's basically the same. I don't think that the West Village is going away if there's no 2 train or whatever. And I don't think that Williamsburg is that if you're taking the L train. I do think that there's a lot of commercial developments in the Bushwick market that are targeting, sort of like younger, more entrepreneurial, creative tech tenants that cannot afford rents in the 50s and 60s and 70s, that some of the other projects are projecting, and are looking for rents in the 40s. And I think that these projects may find it hard to lease space for a company, because if I'm an entrepreneur with 50 or 60 employees and I'm looking for 10,000 feet, and my employees can't get in and out of work, it may be an issue. But I don't think it's a disaster.
Robert, on the retail side, we've seen some developers, pay record prices for land in the Bedford corridor and other places, and now they might be in a bit of a pickle. What's your thought?
Well, I think that retail will be affected, and the The L train, are they going to have one tube, keep one tube open and shut one down? It's not going to start for 3 years. I think everything you said about, people are not looking 3 years ahead of where they want to live. They want to look in the next 12 months. But, in Williamsburg, you have two markets you're talking about. You've seen an explosion in retail, and rents have probably peaked. I don't think the sales are there today to necessarily support some of the rents that have been paid in Williamsburg. So how much more vacancy will occur over the next few years or in 3 years when the L train, or how does that affect retailers' decision to open there? I think it's going to have a big impact. In terms of Bushwick, you have seen as a sort of a pioneering marketplace, and many of the retailers that have gone there is for the cheap rents and the favorable deals from landlords. I don't know if that's going to come to a screeching halt, but I do think that it's going to have a pretty big impact.
Our next panel is on the foreign market, but please join me in thanking our panelists today. Thank you so much.